Hey, everybody. Welcome to another episode of Digital Marketing Therapy. I'm your host, Sammy Bedell Mulhern, and today we're doing something a little bit different. It's not necessarily a podcast about marketing, but I'm deep into 2020 planning mode, and so I wanted to make sure we're taking a holistic view of our business. And yes, that's marketing. Yes, that's planning, but it's also about our financials and how are we planning to grow our business and build our business in 2020. So today I have a very special guest. Her name is Megan Fries, and you might recognize her from a previous episode of this podcast, but she is the owner and operational strategist at Frenzy to Freedom and helps high achieving business owners and managers get to the next level. She specializes in operational and financial strategy, which often involves documentation, accountability, setting, budgeting, and testing and measuring of metrics that let people know they're on track. Megan is a dear friend of mine, and she helps me with my budgeting and financial processes and keeps me on track so that I can have the business that I want and make the money I want and have the freedom I want in my business. By understanding your financial situation, it can really help you find that growth that you need and really understand what it is you're doing and how you're making your money, where it's coming from, where it's going, all that good stuff. So don't be afraid. I'm very excited for this episode, and I hope that you all will enjoy it as much as I do. Before we get into this episode, though, I want to share with you our 30-day website roadmap. So it's the end of the year. It's time to start getting 2020 in gear. And I love a new year. I love a fresh start. So now is the perfect time to audit your website, take a look at it, and make sure it's in line with the goals you have for 2020. So head on over to thefirstclick.net/30 days, where you can get our 30-day roadmap with all of the elements that you need to consider when it comes to your website. That way you know if you're on track or if it's time to maybe make some tweaks or if it's time for a full-on redesign. So again, head on over to thefirstclick.net/30 days to grab that guide, and let's hop into it. You're listening to the Digital Marketing Therapy Podcast. I'm your host, Sammy Bedell Mulhern, and each week I bring you tips from myself and other experts, as well as hot seats with small business owners and entrepreneurs to demystify digital marketing and get you on your way to generating more leads and growing your business. Well, I would like to welcome to the show today, Megan Fries. Megan, you are officially the first person to be a repeat guest on my podcast.
Oh, exciting. Thanks for having me again, Sammy.
Yeah, of course. So if you want to hear Megan's journey and how she built her own website, you can check that out at thefirstclick.net/4. We'll link that up in the show notes. But today we're talking about finances, and we're talking about something that is in your wheelhouse, something that you are amazing at. So why don't you tell people a little bit about Frenzy to Freedom and kind of what you do?
Yeah, Frenzy to Freedom is a business consulting firm, and I help organizations of all types, for-profit and nonprofit, to work more efficiently and effectively so that they can keep more of every dollar that they sell. So I tend to do a lot of documentation, a lot of structure and SOPs, but because my background was heavily in finance and doing at one point and then managing bookkeepers and running reports, a big portion of my business ends up being in financial organization. So helping folks to make sure that their information is accurate so that their reporting tells the truth and that they can use that to create and build a better future.
And I mean, I will say this from personal experience, as you say, to help people understand the truth. That seems, at least for me, not that I'm afraid of what I'm going to see, but I'm afraid of what I'm going to see. Like that seems to be a roadblock that comes up for a lot of people as they're building and growing their businesses.
You would be surprised at how many very established, well-run businesses pulling in lots of money don't really have the accurate information that they need to move forward. And it becomes a problem at the point of which you're trying to make a big change, or you're trying to replicate the products and the services that you offer on a bigger scale, or hire more people, or open new divisions or stores. It's something where, people start businesses because they're really good at what they do or they're really passionate about something, but it's not always top of mind to hone in on the reporting and make sure everything is fine-tuned, as long as you're bringing in more money than you're actually having to spend. So
yeah, I was going to say, do you think that's partially because, like, if I have cash in the bank to pay my bills, then I'm just
you're not worried.
Assume I'm okay, right?
You just assume that everything's happening the way that it should be.
Yeah.
And that's actually kind of why I started my business. We worked with business coaches when I was in the sustainable travel field for 12 years, and they helped us to make it through the recession. We actually started to hone in and understand what people were buying and what was the most profitable thing for us to sell. And we actually raised our prices right before the recession to a market that was not spending. And that rode us through a really tough time. So, seeing that happen with us and that happen with the other clients of my business coach, it just became, top of mind for me to help others create more efficient and effective systems so that they could really, stop being in that frenzy mode and just putting out fires to spending time on the business, on the organization to make sure that it's running the best way that it can be.
Yeah, that's so good. And there's a few things that I really want to make sure that we touch on. And so to start, I've been sharing with you guys kind of how I plan for 2020, what I'm doing, what I'm looking into as far as products and launches and all of the things, right? So we've been talking about content and kind of the marketing side of your business planning. And a lot of what I've been sharing is paying attention to the data. Like, what is it that your customers buy from you? What do they want to buy from you? What does your audience like? And this week, as we're recording this podcast, I am working on the financial side because I think it's just as important, like you're saying, to look at the data in all of that. And so when it comes to pulling together a financial kind of strategy, where do you, if I haven't been paying much attention to it, maybe I've got stuff in QuickBooks, maybe I've got a bookkeeper, but maybe I haven't been paying attention. Kind of what is the first thing I want to look at when I sit down and look at my numbers?
So you want, and I feel like this is the most common thing that comes up. It's always the thing that you want to start with, really measuring some of the specific aspects, but it comes back to that accuracy. So looking back at your reports, whether it's a bookkeeper doing them or you doing them or whoever, really review what is in those reports. Check with prior periods, make sure things are being categorized into consistent places. That's a huge thing just with accounting in general, in case you ever get audited, is to keep things consistent so that if you make an assumption about this belongs in a cost of good versus an expense, that's where you continue to put it period over period. So it's really looking at those reports and making sure that the information that is there is telling the truth. Because without that truth being there, you can't interpret trends, you can't see the seasonality, you can't start to pull more in-depth calculations, such as your gross margin, your gross profit, your net margin, your net profit, if one month you're looking at apples and the next month you're looking at oranges. So when you're looking at things for accounting and finance in general, you're measuring your income. So how much money are you bringing in overall? What are the costs that are related to that income? So the cost of goods sold, or it can be called the cost of services sold for businesses like ours, which are more service-based. So what things would you only have to pay for if you're bringing in a sale? So it can even be labor costs if you're hiring somebody to help you do something and you wouldn't hire them if you didn't make that sale. Oftentimes it's, actual hard costs like binders or books if you include manuals in your services. But really knowing what the costs are that are directly associated with that revenue, so that you can then see what your gross margin, what your gross profit is. So what percentage of the revenue that you're bringing in you actually get to keep, what actual dollar amount of the revenue you get to keep.
Right. Do you find that it's easier to calculate? Because I know that's something we're working actively on, hopefully getting pinned down in 2020, right? What it actually costs me to build a website, what it actually costs me to run my programs, my membership. Do you find it's easier to pull together those costs and expenses when it's a physical product versus a service based?
I think it's easier for people to wrap their mind around it because we all have, a notion on what is cost of goods sold. And it's typically referred to as cost of goods. So that sounds like a tangible item. It's a different thing to if it's a service-based industry. There's sometimes a difference between what a bookkeeper would place in a cost of goods versus an expense than what might be worth it for you so that you can create a better margin. Because when you're thinking about that margin, so this is your gross margin, if you're planning to grow your business and you want to scale it in the next 3 years and double your revenue or triple your revenue, the best way to be able to predict what the whole shebang looks like is to be able to associate a percentage of cost of goods to that revenue. If you're consistent and the things that you put into that bucket of cost of goods are things that are 100% related to your revenue, it's going to be a lot easier to pull a margin than if you're sometimes putting them there, sometimes putting them into overhead. So you want to come up with that idea and be very consistent about keeping things there so that margin is consistent and you can use it to help project the future.
So yeah, because planning, I think one of the things that you said to me a while ago or said in a meeting that I loved was when you pay it, like some people feel like, well, if I'm dealing with numbers, that's actually hurting my creativity and my plans for growth, right? Like it's just too data driven and specific. But when you actually own and control and know your numbers, it can actually open up that flow of creativity because now you can say, okay, well, based off of what I'm seeing, I can project X amount of growth in my business. So therefore I know I'm going to have X amount of dollars that I can play with to launch this new product or this new service or start to ads, right? It's more empowering.
Yep, exactly. And I really want to, hone in on that, consistency aspect because it's knowing that your numbers are the same way every time and that this is the way you do things that allows you to manipulate them in other scenarios. So you've seen the budgets that I tend to use with folks, and those budgets are outside of the accounting software because I want to see more than just the reports they give me. I like to put the things together and I want to pull different reports and generally the budgets and the calculations ask me or give me more questions that I can ask to dive into and figure out what's the next thing that we really need to be looking into. Are we having a problem with the profitability of the service that we need to dive in and see what our cost of goods are? Or maybe it's more of an expense problem. Maybe we just have too high of overhead to support what we're actually bringing in. So having the consistency in the books is step number one, making sure it's accurate. There aren't things there that didn't exist. So duplicates are pretty common in accounting, especially with some of the newer programs. So making sure that things are reconciled. Bank statements always match with the accounting books to say that this actually happened. And then you can pull the reports and plug into other tools that help you to manage the future, such as a budget.
So yeah, and I think another thing you said to me before that I love is you have your budget, but then you sort of, especially on the income side of things, reforecast every 30 to 60 days, not the whole year, but you go in and manipulate every 30 to 60 days. This is what I expect to come in the next 30 to 60 days so that you can make immediate decisions about cash and expenses and what you're doing.
Yes, totally. I am a big fan of a monthly budget for businesses of all sizes. And I think that is a good period of time to, let your projections ride and then come back and say, how well did we do against those projections? And I generally have folks set a budget for 12 months. Sometimes it can go as far as 36. But 12 months is usually a pretty good picture to have a goal that you're working towards. And then you set the monthly expectations that line up for that year. And then every month, I like to go in and compare what actually happened with the projections so that you can see if your assumptions were accurate. Because, I mean, let's face it, a budget is just an educated guess.
It's a plan. It's not, yeah.
It's a plan. And sometimes that plan is a wild shot in the dark because you don't know what's going to happen, just in the, economy. You don't know necessarily if certain campaigns are going to work. Mm-hmm. But you want to be able to compare the actuals to those projections so that you can adjust your expectations moving forward. So if you were way over on, your first month of the quarter, maybe you look at the next 2 months and say, well, maybe we can't expect to receive this much, or maybe we blew our expectations out of the water and should bump up a few expenses or things that would support that growth. So it's being able to look far enough ahead that you're comfortable with the next, 90 days, but make sure that if your big goal for the year isn't on track one way or the other, that you're making the adjustments within that 90 days.
Within real time. Yeah. And I think what I love to, and why I am a little bit excited about working my budget this week. I mean,
yay! We'll
Who
see. Wouldn't it be? Come on.
It's more, I don't mind the budgeting process. It's more the reconciliation that I have to do since I haven't done it since May. Like that's more the tedious part for me. What I like about putting together 2020 plans for your business. So what do you want to launch? What do you want to do? And then how are you going to market it? And then putting a budget together. I don't know if that's the way you would suggest doing it, but that's why I like doing it that way, because then I can see, I can tie those expenses specifically to the actions that I know I want to take. And I can say, It makes it easier to say no to things. So when I'm looking at subscription renewals or ad expenses, like I can much easier place, that was real bad English. I can place it better in my budget, knowing these are the activities that I'm going to do. These are the activities that I'm not going to do. And now the budgeting process feels like it's easier to wrap my head around.
I love that. And that's, I mean, honestly, like I don't even love to sit down and crunch numbers, all the time, like every month. But if I know why I'm doing it, the why behind my goal, then it reminds me, oh yeah, I want to be able to go snowboarding on Fridays, or I really want to be able to hire this new person. Whatever that goal is, if you're understanding why you really want it, then it just makes sense that you are going to enjoy some of that planning component. But another thing that you said is that you haven't done it for the reconciliations for a while. It is very easy to let those things slide, just like it's very easy to not spend time on your business rather than in your business. So this is the putting out the fires and answering the questions that are, being yelled the loudest at you. But if you take the time to work on the business and put these little pieces in place, it's something that does not become as overwhelming because you remember little by little why you're doing it, rather than, this is weighing me down. I need to get it done.
Well, when you do it every month, it takes less time too, because there's all these little nuanced things like, what did you spend this, that, or,
that you forget.
Who did you take out to that coffee that you might want to attribute to that client, all of that stuff. And if you just do it every month, then it's much fresher in your brain.
And you even forget where things, where you're putting things in your chart of accounts.
Yep.
Does this go in software or does this go in a general admin expense?
Right.
So it's easier for everyone if you stay on top of it. And I think it's the same, with bookkeepers and having people that are supporting you in that position. People are going to make mistakes and push things into different directions, especially if they're doing it for a lot of folks. But if you, as a business owner, are staying on top of reading your reports and understanding how things are lining up, and being able to adjust things pretty regularly, it's easier for everybody in the long run. And it's going to save you money, actually, because you won't be spending as much time on it because your time is your money.
Well, and you're not then having to go ask those folks that are supporting you to do work over again.
Mm-hmm. Exactly. Which you have to pay for.
Right. Exactly. And And I like what you're saying about it's a partnership, because we say the same thing with our one-on-one clients. Like, even though we're the ones that are building the website, or we're the one that's executing your social media stuff, it doesn't work without you playing a part in crafting the language, the messaging, the graphics.
Right.
Like, it's still your business and your brand. So you still are ultimately responsible for making sure things are done correctly. So you can't just pass it off and say, okay, take it, see you later.
Yeah. Exactly. And I think that's what most people would like to do.
Yes, I agree.
Yeah. But when you see how it can affect the business in the long run, I feel like a lot of people don't really scrutinize what's happening in their books until they get to that point. And it's usually not because of, an intention to do harm, but if you're not paying attention to things, then they can very easily, go wonky.
Well, here's the thing. Nobody's going to care about your business more than you do.
Right.
So if you don't care enough to do it, nobody else is going to do it. And then, like you said, you when you get ready to scale and grow, it's much harder if you aren't aware of your kind of financial situation.
Yes.
Yeah.
It's a lot harder. The best way that you can predict the future is to create one.
Oh, that's a good little soundbite right there.
It's not from me, but it's I think that's Peter Drucker.
Okay. That sounds like something he would say.
But it's super powerful.
It is super powerful.
It's that planning aspect works in all areas of our lives, and numbers is a huge one. So
yeah. So if I get my budget created, I'm doing my monthly, like whatever, I get my reports from my bookkeeper, I'm doing my monthly reconciliations, I've got a handle on where my money is coming. Do you have like a 6-month check-in? Like, how often should we really be kind of spending time to dive deep into kind of the analysis side of what we're doing?
I think analysis, it gets deeper and deeper as you up level. So as you get those systems in place for regularly reviewing, and if that's happening and your books are accurate, like you said, you have your goals, maybe for the year, maybe for the 3-year, and you're understanding how the strategies that you're putting into your everyday actions are affecting those. So this is like big picture goal setting strategy where you're investing your time and your money. The next area, it could be, and this is not for every single business, but you can step into product service profitability.
Mm-hmm.
So understanding those different revenue streams that you have, how much money you're bringing in, what are the cost of goods associated with that revenue, even understanding what an expense is that's related to that revenue source. So how much time you're spending or somebody else that's on salary is spending. So really understanding, outside of your P&L, outside of your budget sheet and all of those financial reports, what is being invested into this particular revenue stream.
Yeah.
It's a powerful thing because you realize what the profitability is, what the margin is. And this is how our business in Florida, the tourism company, was able to increase our costs on that 1 or 2 tours that we had, because we knew that people would continue to buy them even through the recession. We knew what margins we had on them, so we could make an accurate estimate of how much we could make up for by charging X more.
Yeah. Well, and one of the things that I'm tracking for a client of mine is they're an e-commerce store. And so we're tracking different sales at different time of the year. Mm-hmm. So different discounts versus so we'll be tracking a couple things, like what does the time of year have to do with it, but then also
what seasonality,
but then what discount are we giving and how does it increase or decrease? Like, what is the actual net profitability that we make off that sale after ad spend? Well, after ad spend, after cost of all that stuff, so that we can really clearly see, okay, like these sales work, these are the best. This one we could probably drop because it's not actually doing much for the effort. And so that, again, isn't something you would clearly pull out of QuickBooks.
No.
But by tracking metrics like that are important to the growth of our business.
And it helps you to think about things that you would not have necessarily attributed to being a cost for that operation of that specific product or service. Mm-hmm. So really looking at every single thing that has to happen for that to be supported. And then, like you said, which things might you want to stop even offering because they're not bringing in as much of a return? Or what model do you have that is working really, really well that you can replicate on another level?
Yeah,
so it really that insight.
Yeah, because most people that are listening are probably either one people shops or like maybe 2 or 3 employees total. And so what I'm really excited about diving deeper into is, like you said, my margins on my products and the services that I offer, because I don't have time to just do all the things.
Mm-hmm.
So what can I do that's going to bring me the most bang for my buck so that I can continue to grow to get to where I can hire more people? And sometimes that's hard choices because it might be the thing you like to do the most.
Yes. Well, and so there's so many, like, product and service profitability is a very valuable tool, but there are other areas which it might lead you to the importance of tracking. So even when you're saying time, so how much time do you spend on different parts of the business, and what is really supporting those big strategies that make your daily actions turn into those goals? So really looking at time and understanding how all of that has to play into the financial component of the products and services that you're offering. So, looking at, go ahead.
Oh no, I was just going to ask, how would you track your time and would you just attach an hourly cost to that? Like whether or not you're actually paying yourself that or not, but how would you kind of pull that into your...
It depends on what type of things you're doing. I think just even doing a very basic check-in on where am I spending my time once a quarter, even once a year. So understanding mine and your entire team, if you have a team, where are you spending the majority of your time, so that you can really see what the distractions are, where you can be more effective, what you can avoid, and how that plays into the things that are actually producing revenue. Okay. So what percentage of your time is actually going into that revenue production versus planning and working on the business versus just, doing things that maybe somebody else could do pretty easily.
So we use a tool called Toggl. It's TOGGL, and that's how we track all our time for our clients. But we need to maybe spend just like a regular week.
Yeah, just a week, just to see where is the time going, so that you could make a bigger impact on where it's going and how that fits into your product service profitability as well. But the other thing I wanted to mention is the profit equation, and it probably doesn't make much sense without seeing it. But I mean, it's pretty basic. Looking at your number of leads, the number of sales that you get from those leads, so your conversion, your average dollar sale, and your average number of transactions. So it's an actual equation that you can look at. And when you know, especially, your product revenue streams or service revenue streams, when you know what those specifically look like, you can get even more detailed and see how this equation fits together and how you can make an impact if you're adjusting the number of leads versus the conversion rate versus increasing the either the average dollar sale or the actual price for the product or service. So it's looking at these things as a whole and understanding where can I target and focus my efforts, so the time that I'm spending, to really make a huge impact on what my bottom line looks like.
We can include that equation in the show notes. So if you
great. I'll send it to you.
Over to that, to the show notes, you can check that out there. Because I feel like we start our businesses because we're passionate, because we're excited, because we know that we're good at what we do. And as entrepreneurs, as startups, as you get going, things tend to change, right? This worked, this didn't work. We shift, we grow, we change, whatever. And I think what I'm hoping this episode will encourage y'all to do is really just sit down with your business again and say, okay, I've done all of these things. I've created all these products. I've created these services, but what is it serving kind of what my bigger purpose is? Is it really what I want to do, how I want to do it? And kind of streamline and simplify. So try not to do all the things and then come up with your plan and let your budget support that that plan. And when you have all these profitability measures and you know your margins, then it makes it easier, right, to make those decisions because it's just there for you.
Exactly. And it all starts with that foundation of accurate information and then what you can read from that information. So what question does it make you ask yourself that you need to go look for the answer on? And it's different for everyone and for every business. Even businesses of the exact same type in the same industry have very different assumptions of how they operate and what they might call a cost of goods. But it's valuable to have that base and then to be able to dive in and say, where can I make the biggest impact? Because I only have so much time.
Yeah. Well, I like what you say about different businesses in the same industry, because it's also, we all have different growth that we want, right? Some people, I mean, for me as in marketing, I've made a conscious choice that I want to switch more into the online course and membership world. And so I have a different path that I'm willing to take to get to that goal. So while I might not have the profit that I want now, it's a long-term game that I'm playing versus somebody who says, okay, I'm in marketing and I want to focus on, we both do one-on-one right now. And maybe their growth wants to be one-on-one creating a really high-end agency, like, right? Like that's a very, you're going to set things up differently. While we might be doing the same work right now, we're going to put our funding in different places in order to change how.
And you have different strengths. Yeah, right. You have different strengths too. And
that's smart. So it's just the whole comparison thing, right? We tend to do that a lot in business, compare ourselves to other people, especially with money.
Yeah. Totally. And sometimes that's helpful in helping you to choose your next step. I mean, there's industry metrics and things you can look at, but it also helps to identify what is your unique benefit that you're offering folks. So,
right. and go your own path. Okay. So what else? Because you don't know what you don't know. So what questions do people maybe typically not ask about their finances that maybe they should be paying attention to?
I think we've covered a lot. I feel like the majority of folks I first meet, it's really that question about accuracy and not knowing or not wanting to know or not asking that question. And I think it's an area where a lot of people don't have comfort, and it's really easy to just, not ask that question, that basic question. And
do you think they don't ask the question because they don't, because I get this a lot too in my industry, they don't want to act like they want to act like they know what they're talking about, even though they don't. So they maybe don't ask the questions because they don't want to come across as not understanding their own business.
Yes. Or they might not even know that they would understand the answer to the question.
That's a good point.
So I think beefing up, as a leader, as a business owner, especially beefing up just the financial knowledge of what are the important things for me to know about what's going on, and asking the questions of those people who are putting things together for you. And I think with a lot of businesses, it starts with somebody doing it on their own, or maybe outsourcing and just relying on the reports and not asking the questions. But I mean, you've got to lean on the people that you're outsourcing to. You need to beef up the knowledge of folks that are doing the data entry if it's internal. And I think that is the number one thing that really I run across, is making sure that information is accurate in the first place. And you understand, what's the difference between a profit and loss and a balance sheet, and what does a statement of cash flows tell me? So it's keeping those ideas top of mind, so that the very basics of just, what is my income? What are my cost of goods? And how is that defined? What are the expenses that line up with that? And then how does that big picture tie in with the statement of cash flows?
Yeah. So if I'm just getting started, if I haven't been paying attention to my books and I'm like, okay, 2020 is the year, and I should probably have about 3 months of data before I really kind of dive in. Or no? One month can tell a story.
Even if you've been in business for a month or 25 months, you have the data there. I always suggest even when you're just getting started, to pull some of that data and understand what it means. And even if you didn't have accounting books, you can pull bank statements and organize by memo, so by vendor, to see how much, do I spend on website or marketing or even software. Software is a huge thing.
Yeah.
People spend a lot of money on, $2.99 here and $9.99 there add up month after month. So just looking at what has happened in the past and what can I say is my expectation moving forward. So I would say pull, that information and understand, what it is you want to change about how it's either been reported or, what you need to do to start reporting.
Yeah. But just start.
Just start. I mean, it's, you have to start somewhere, and you're only going to get better if you, practice those building blocks to get it to that point. And oftentimes it, the important factor of just having the backbone. So having, understanding what my income is, what are my cost of goods, what are my expenses? So all the transactions that are coming in and going out of my bank accounts or any account that is associated with my business month over month. Right. And knowing with some, accuracy that it's telling you the truth.
Yeah, because I think you can pay attention to the wrong things just like you pay attention to vanity metrics in your marketing. If your numbers aren't showing you the real story, then they're not useful.
Totally. And then see what questions it brings you next. I think, people get a little bit scared when you start talking about metrics like current ratio and what's my working capital, my days outstanding to sales. None of those things can be identified if you don't have the basics there anyway. So if you take the first step and just dive into doing that accurate part of reporting, it's going to lead you to the next question that will, uncover those ratios and those calculations.
Right. So you can dive deeper with the data when you have it because it's already there pulled for you, and it makes it much easier to kind of play with those numbers.
Exactly. You can't really do anything until you've got them there.
Yeah. I love it. Okay.
It's kind of simple, but it's a huge thing. And I think it's a consistent challenge that business owners and, executive directors, it's especially if you've been in business for a while or operating for a while, it's just always worked and it's always happened. And,
right.
It's hard to take a step back and say, well, what is this again? And really diving into, to that step, but it's extremely powerful. And, it's setting that plan in motion so that you can predict the future and you can get better and better at it every month.
Well, and deciding if this is a hobby for you or if this is a real business.
Mm-hmm.
And if you're not paying attention to financials, then it's not a real business. I don't know.
Yeah. A lot of very large companies would be very upset with that statement, but it's
well, you know what I mean? Like,
very true. But it's very true. I mean, you would be very surprised at how many people with huge budgets. So they have a lot of money coming in, a lot of money going out. And sometimes it's not accurate at all.
But I'm just thinking about, when you start your business and you don't even have your business account set up and you don't, you're not actually running a business, like deciding that this is something you're doing as opposed to just a hobby.
Right.
Is important. This takes you to the next step. I'm not trying to offend any of you big business owners.
No, it's just, I think it's just a reality, a lot of folks want to disregard, but it's completely true. And, another thing, huge part of, like you're saying, being running an actual legit business is keeping those, personal expenses separate from your business expenses.
Mm-hmm.
And I mean, even for a sole proprietor, there's a lot of importance in just understanding how well is your business operating versus your life.
Oh, yes. And I feel you there. I feel you there. Yep. Well, I know this isn't a marketing podcast, so but I hope you guys really got some good information on how to start, where to go. We'll put some good resources in the show notes for you guys so you can check those out. I want to hear about your 2020 marketing plans. I want to hear about your budget plans. I will share with y'all because I'm doing my budget this week. Megan and I are meeting next week. And hopefully my budget revenue numbers will match up with what's in my head. So I'll keep you guys posted on that. But if people want to find out more about you, I know you have some free resources on your website and things like that. How can they do that?
Yes, my website is frenzytofreedom.com, and they can reach me at megan@frenzytofreedom.com.
Perfect. Yeah, I appreciate you coming and talking money.
Yeah, thanks for having me, Sammy. It's always fun to be on your podcast.
Well, and she's going to be a three-peater because I think we have another podcast we're doing with some other lovely ladies later this month.
All right. Awesome. I hope there's a badge or a trophy.
There is. You're Digital Marketing Therapy podcast regular. I love it.
All right. Thanks, Sammy.
We'll talk to you soon.
All right. Thanks.
A big thank you to Megan for joining me on this episode of the Digital Marketing Therapy podcast. If you want more information about the resources that we shared here, the formulas and the things like that, please head on over to thefirstclick.net/31 for all of the show notes. You can find them there. And I hope that you'll subscribe wherever you listen so that you don't miss an episode. We have an exciting announcement happening on the next episode, and I don't want you to miss out on that. So subscribe wherever you listen. And if we're not where you listen, please let me know and we will make our best efforts to get our podcast available on your favorite channel of choice. Okay. So for now, I hope you guys have a wonderful day and I look forward to talking to you soon.